Matt from the Trade Brigade here doing a technical analysis on ticker symbol SPY for the S&P 500 ETF. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will of course be an update. We cover this market regularly here on this channel as well as in more detail over on the main channel. That being said, we've got some levels in play. Mainly, what I want to discuss is the fact that these 4 days of balance are starting to become bearish price acceptance instead of a sharp rejection of these lower prices. You can clearly see that we're resisting the 200 SMA now 2 days in a row, and also this 443.50 coming from the prior breakout point, right? We know that that was that level from in there. That's really where the market took off of from, and we can't get back above that level. Even further than that, we know that really for things to improve in the SPY, we've got to recapture this big flush point closer to 450. We're still fairly far away from that, and nothing about the chart would really suggest that we're going there anytime soon. So that's what I've got from the daily. It is also starting to build a 3-day flush point here close to 428.50. If that area breaks, we know all the target is Monday's low, and then we're really going to reevaluate the chart. You don't want to be shorting this on that move there until we confirm a lower high on a smaller time frame. So with that being said, let's take a closer look at the 30-minute to talk about that situation specifically. So here you go. Here's the 3-day lows. If we break the level, move to Monday's low, that's fine. I wouldn't short here. I would wait for some sort of a lower high bounce and then a reattempt for the breakdown to make the daily bear flag start to pan out, right? And in that instance, we know that we do have targets underneath at roughly 411.63. I wouldn't really anticipate that into Friday. I would really expect some more balance, especially noting that Apple was starting to post some positive gains from their sort of earnings report. We'll see how that pans out by the time open rolls around. But for now, I would probably be looking at the 3-day flush point into Friday and maybe either chop or bullish price acceptance up towards the highs. Maybe, again, very, very speculative here. It's not a likely scenario, but maybe if that happens into next week, maybe there's a breakout up and over 443.50 just for the back test of 450, and then we would really reevaluate to the upside, right? For now, this is just kind of chop zone. You can see that the market's been in crazy throes of volatility, moving back and forth. There's not really a ton of structure in there or any pattern that's unfolding where I can say, yeah, certainly there's an entry point here to trade to there and boom, boom, boom. It's easy, right? Not going to work that way with the S&P 500 as we move forward into the remainder of the week. So those are really the broader things that I'll be thinking about here in the SPY, namely the 3-day lows, and potentially if we get chop up here and price acceptance, maybe into next week, there's some sort of breakout up and over the 443.50. But as I've mentioned a number of times now, the daily chart would suggest bearish price acceptance. That's not really going to bode well for a reversal. So one step at a time. That's all I've got for you today. If you enjoyed the video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.